Hello traders! In today's video I'll show you how to trade a flag, when a flag is formed, how it is formed and what it means. The flag is a trend continuing figure, and quite often when there are small corrections or slight lateral movement, a flag is formed. I will show you how to predict if a flag can be formed after the impulse wave, how to trade it, when to enter a deal, as well as where to place take profit and stop loss. Flag is one of the strategies that have the highest risk reward or return on loss. Let me show you how to trade it. I'm sure you will be satisfied. Let's get started. So, let me show you how to trade strategy flag. First, I want to look at what the strategy is. I want to introduce you in a great detail to the strategy because there are very good deals with very good risk reward as well as very great success. So, I want you to be very familiar with how the strategy works. A flag is a corrective figure. It is formed most often when we have a strong impulse wave and then more than one corrective wave is formed. Let me give a little explanation. When we have an impulse wave, we already know how a trend is formed. Trend is formed by impulse and a corrective waves. Usually when we have an impulse wave, we have a correction wave and then a second impulse wave. But when this correction wave is small, we see that here this wave has not reached the half of the impulse wave and follows a slight rise, but too light. Still not directed movement, and a second corrective wave follows. The result is something like a sideways movement, but slightly inclined in the opposite direction of the impulse wave. What I mean, when you have an upward impulse wave, the corrective waves are directed slightly downward, forming a descending figure, slightly lower bottoms and lower tops. Because these waves are small and it is more like a sideways movement, it is shaped like a so-called flag. What does this flag show on the market? It shows that there is no direction of movement. The big players have not yet started to trade in the direction they want. Or when the big players create the impulse wave, when they step aside from the market, then these corrective waves are formed. There are two ways to define them. The first wave is when there is a big corrective wave, then we will have a Fibonacci repulsion. This is a strategy that we will look later in the course. The second way is when there is a slight hold or a slightly sideways movement, then a flag strategy is simply formed. Two small corrective waves. When we have an ascending impulse wave, the two corrective waves are slightly downward, and we shape this flag by drawing trend lines from the highest top that has formed to the next tops. We copy this trend line and place it from the first bottom that has formed to the next bottoms. To have a flag, we must have a minimum of 4 repulsions, at least 2 from the top and 2 from the bottom. This is not a top and this is not a bottom. This is the first bottom, this is the second top, and this is the second bottom. In order to have a shaped bottom, we must have at least 4 or 5 candles, and in order to have a top, we must again have at least 4 or 5 candles. Remember these things. Let's get back to the rules. This is a corrective figure. We have an impulse wave, then we have 2 small corrections to shape the flag. We draw trend lines on the tops and bottoms and see how it is shaped literally as a flag. Flag is visualizing just the movement of the price. When we have the descending impulse wave, a very strong fall, and we have 2 ascending corrective small waves. Again, we have 2 bottoms and 2 tops. We have 4 price rejections as required by the strategy. If there are 3 repulsions, it is not okay. Most likely there is no flag. If there are more repulsions, 5, 6 repulsions, must be careful not to form a triangle. If the lines comes together, most likely a triangle is formed. The lines must be literally parallel to each other. They can be slightly gathered or separated, but not to form a triangle. So remember it, downward wave, 2 corrective waves, usually followed by a new impulse wave after such an upward or downward movement. When to get into a deal? It is accepted as an entrance when the price breaks and closes a candle outside the flag. When the price breaks one of the trend lines, let me give a little down, and here you go. We have the impulse wave, 2 corrective waves, we have 4 repulsions and a break, and a closed candle above the trend line. Then we accept that we have to enter a deal after we have a closed candle above the line. I repeat it many times because it is very important to understand it correctly and remember it. I go back a little. In the case of an upward impulse wave, there must be a break in the upper trend line. In the case of a downward impulse wave, the breakthrough must be on the lower trend line. And here I will give a little down again to show the opposite. We have a downward impulse wave and a break of the lower trend line. Why the bottom? Because when we have a downward wave, we will be looking for sales. If we have an upward wave, we will look for buy. Take profit. How to determine what profit we are looking for? To determine the take profit, we measure the size of the impulse wave with an arrow and apply it from the last bottom of the flag down. I will show you now. With an arrow, we cover the beginning and the end of the impulse wave. Give the right bottom and clone the arrow, or just move it and apply it from the last bottom, from the 4th repulsion of the flag upwards. Not from the breakthrough, but from the bottom. Because what is the goal? I will repeat again. The goal here is to capture the new impulse wave. And we can best determine how big the new impulse wave will be by measuring the previous impulse wave. Here we are looking for 100% of the movement. The stop is placed 10 pips under the last bottom of the flag, with an ascending flag 10 pips below the last bottom. Let me show it. When we expect long position, we put 10 pips under the tail at the bottom and take profit at the top of the arrow. Here I want to make a clarification. In the presence of a strong level, maybe weekly or daily or some swing zone, which is located just before the profit, it is good to take the deal at the level or the swing zone. It is very important to close exactly the deals where you have to, or to protect the deal. As I have said many times, when the deal goes to plus at least 100 pips, then move the stop and collect half of the deal, so you protect the deal. And it is 100% protected in this way. Here's another example. An impulse wave, 2 corrective, a breakthrough and a closed candle above the trend line. We have entered into a deal. We have measured the size of the impulse wave, we have applied it from the last bottom upwards. We have set a take profit and set a stop loss of 10 pips below the last bottom. The idea is that we expect the new impulse wave to be as big as the previous one. And you see, the take profit is hit. When we have a downward trend, we measure again from the top to the lowest point of the wave to the bottom and clone this arrow and apply it from the last stop, which is inside the flag down, to determine where our entrance will be when there is a breakthrough of the flag and where will be our take profit. Stop is 10 pips above the last stop when it is for sale, 10 pips above the last stop. And then the development of these deals. The price has stayed here for a while, but it shouldn't bother you. It won't always be the way you want it to be. To open a deal and to immediately fly in your direction. Discipline is the heart of everything. Now let me show you some examples of how flag is formed and executed. Now in these pictures, an impulse wave, 2 small correction waves, you're drawing a trend line at the tops and bottoms, waiting for a break. Once we have an impulse wave up, this is a trend continuing figure, so we will look for buy deals. We wait for the candle to close above the upper trend line, then we launch a deal. To determine how big the take profit is, we measure the whole impulse wave and apply it from the last bottom up to see where it will be. We put the stop 10 pips under the last bottom. Remember it. Here is the development of this deal. Here we have a downward wave. Since the flag is a trend continuing figure, we have to look for short position. We are waiting for a break of this downward trend line, which forms the flag. We wait for the candle to close below the trend line and then we launch a deal. I deliberately repeat it again because it is very important to have a closed candle. Here, this pin bar has not closed under the trend line, although it broke it. And if you run a deal here, it will immediately return to minus, and you will immediately say to yourself, oh, we messed up the things, it will not work. But in fact, you see that this is not the case. You just have to be patient and wait for the candle to close below the line. Because then almost immediately the price starts to perform the downward movement. So remember, the flag is a trend continuing figure outlining the tops and bottoms of the corrective waves. When there is a breakthrough of a trend line, you open a deal. Of course, if there is a breakthrough up here, you will not enter into a buy deal. You will simply not enter a deal because there may not be a flag. However, if there is a breakdown, then you enter a deal. Measure how big the impulse wave is and apply it from the last downwards to determine the take profit. The stop is always 10 pips above the last stop. I want you to draw your trades accurately and place your take profit and stop loss exactly to pips, because it depends on whether the deal will be successful or not. So remember very well. Okay, let's now move on to the chart so we can see how things happen there. Don't look this for a second, we'll get through it in a moment. But first, do you see something here? I'll be very pleased if you see it, because that will tell me that you have a progress in the course. If you didn't see it, don't worry, just practice more. Return on the strategies that we go through by now and practice more. Okay, let's go through it together. What we have? We have an impulse forming a top, then a bottom, then a second top which touches the weekly level, then another bottom, and a third top which is lower than the previous one. As you can see, it formed like a head and shoulders. I wanted to go through this example together because it is a nice example that sometimes it formed really hard to be noticed and you have to practice to see them on the chart. In this case, it's a good example because when it is tilted up, you can see, and you are looking for a short position. In this case, let me show you. If you enter here, your stop would be very small and your profit would be bigger, and the risk reward of the deal is going to be 3-1, which is really good. That's why when it is tilted up, it is really nice for a deal. Even if you have entered a deal here and your stop loss is hit, your stop loss would be small, so you will enter another deal here and your reward would be bigger and you still end in profit. Nevertheless, your stop was hit, so don't worry. We have a formation of a head and shoulders, as we said, but let's look closer and see what we have here. We have a repulsion from a strong weekly level, then we have an impulse and two small corrective waves has been formed. So we're gonna draw a trend line on the bottoms here. Let me zoom a little bit here, and we're gonna draw a trend line on the tops. As you can see, we're gonna name it flag, and it actually looks like a flag turned upside down. That is why we call it flag. We must have a strong impulse, then a two small corrective waves. As you can see, we have a start, we have a repulsion here, a second, third, fourth repulsion, and we are waiting for a breakthrough and a candle to close under it. Let me take a few candles back so we can see how it formed perfectly. As we said, we have an impulse and two small corrective waves have occurred. We have repulsions 2, 3, 4, and let's see what happened next. This candle here is a manipulation. You don't have to enter a deal here. You have to wait for a candle to close. Let me show you why. Because if you enter here, your stop would be something like that, 10 pips above the last repulsion. And imagine the price return back, repulse from this trend line right here and then make a breakthrough, it still would be a flag, but your stop loss would be hit. And that's why you have to comply with the rules. You have to wait for a candle to close. And let me erase this. Because most of the times when the candle closes under our trend line that we named flag, as this candle right here, this is our entry, the price never returned up. It falls quickly, sharply downwards. That's why you have to wait, to be patient, and to comply with the rules. Okay, let's enter a short position here. Our stop, 10 pips above the last repulsion, 103 pips. Okay. For the take profit, we're gonna measure the distance from the start of the impulse to its end and apply it from the last repulsion downwards. Not from the breakthrough, not from where the candle closes, remember this, but from the last repulsion downwards. As you can see, here is our take profit. We must comply again with previous tops, bottoms. We have a strong daily level here, so we're gonna make our take profit down to the daily level. Okay, let's go through it again. We have an impulse, 2 small corrective waves. Combined, they make not less than 4 repulsions. Here we have first, a second one, third, fourth, fifth repulsion. Then we have a breakthrough. We are waiting for the candle to close under the trend line. And we are entering a short position. Stop, 10 pips above the last repulsion. For the take profit, we measure the distance of the impulse wave and apply it from the last repulsion downwards. Let's see what happened next. You can see there is no correction after a formation of a flag, and when we have a breakthrough and a candle that closes under it, almost immediately the price made a new impulse wave downwards. That's why you must comply with the rules, because flag is highly profitable strategy and the success rate is really high. Okay, after that we protect our deal by moving the stop 5 or 10 pips on profit and extend the take profit down to the next strong level of, in this case, support. Okay, let's see. Here we are not going to draw this again, but I wanted to show you. Here we have a huge impulse wave. Then look what happened. In this case, we're going to look at it on a 1-hour chart. Here we have an impulse. We have the start of the correction. We have a 1 repulsion, second repulsion. Here maybe we can count it as third repulsion. Fourth repulsion. No. Here we have a breakthrough. Again, start, 1 repulsion, 2, 3, 4 repulsions. Breakthrough of the flag, a candle that closes under it, and we are entering another short position. As we can see, okay, our take profit is hit. In this case, again, we can collect half of the profit on these levels here and protect the deal by moving the stop. And you can see from one huge downtrend, one huge fall of the price, we have a total of 3 deals which are highly profitable. One on Head and Shoulders, and second one is on flag, and the third one again on flag. Okay, next example on flag is on the same chart some months later, but this time on a daily time frame. First, we have a strong impulse wave, then a correction has formed. If we apply Fibonacci, we can see that the price doesn't reach the 50% level. But we're gonna talk about Fibonacci later in the course. For now, we have an impulse wave and 2 small corrective waves. Now I'm gonna use the replay. Okay, again, we have a strong impulse wave, then a correction, then a second corrective wave. We're gonna draw a trend line on the bottoms here and a trend line on the tops here. We're gonna name them FWAG. And now, this is the end of the correction. Let me highlight the repulsions. We have 1 repulsion, 2nd, 3rd, 4th, 5th repulsions. Now, we are waiting for a breakthrough and a candle to close under the flag. This would be our entry in a short position. So, we're gonna seek for a better entry again on a lower time frame, on a 4-hour chart. Let's see. Sometimes, most of the times, when you draw something on a daily chart, you have to adjust it on a lower time frames. You can see on a 4-hour chart, here the price almost reaches the FWAG. You don't have to rush to enter a deal here. It is really important. If you adjust it on this repulsion here, you can see the price almost touches the FWAG. So, you don't have to rush to enter a deal. A candle to break through and to close under the FWAG. Because if you enter a deal here, it will immediately go to loss. And you will start to blame yourself and start to think that the strategy doesn't work. This is not the case. You just have to be patient. Let's see. Here is our proper entry. Here we have a candle that closes under the FWAG. We enter a short position. Now we're gonna adjust the stop and the take profit on a daily time frame. Okay, our stop loss 10 pips above the last repulsion for 246. Okay, you can see on a daily chart it just looks like a tail that crosses the FWAG, but we said we are seeking a better entry on a lower time frame. Then on a lower time frame, on a 4-hour chart, we have a breakthrough and a candle that closed under the flag. So this is our entry. For the take profit, we're gonna measure the distance from the beginning of the impulse wave to the end of it and apply it from the last repulsion downwards. Let me adjust it. Not from where the candle closes, not from the breakthrough. This is really important. This is only on FWAG, but from the last repulsion downwards. After the formation of FWAG, we are waiting for a whole new downward movement. This would be our take profit. As we already said many times, we always comply with strong weekly, monthly, daily levels. So we're gonna adjust maybe 5 pips. The take profit 5 pips before the weekly level. Okay, let's see what happened next. You can see this on a daily chart. It took some time for the deal to execute, but as you can see, when the price breaks the flag, it almost immediately falls down. Here, on this daily level, we can collect half of the take profit and protect the deal by moving the stop 5 or 10 pips on profit, as we already said many times. This is really important. So the deal is protected, you collect half of the profit and you let the deal to hit the second take profit. Okay, again, impulse wave, 2 corrective waves, at least 4 repulsions, breakthrough, a candle that closes under the flag. We can seek a better entry on a lower time frame. We measure the distance from the highest part of the impulse wave to its end and apply it from the last repulsion downwards for our take profit, and we comply with previous strong levels. This is how the flag strategy is traded. So now let's move on to the next strategies in the course.